Hello, folks. Brandon Chapman with today. It's another Theo Night video for Monday, June 6, 2022, 6-6. Anyway, look at the market today. You'll notice we did fade from the high. Kind of the title of today's session is the Amazon stock split not enough to carry. Where's Goldilocks? You know, the porridge that's just right. What's the mixture of Fed policy, federal government policy, debt, all this stuff? How does this all come together so we find the porridge that's just right so that the market can carry higher? I'm not sure it exists. And I think today's news or today's trading kind of reflects that possibility. As we look at the ES futures, for example, we did trade towards the high of the session, towards the upper end of the range, going back to the high for May 27th. Then we closed briefly above on Thursday, but we did fade back towards support again. As we look at the cash session as represented by the SPY as an example, you'll see we did break out of this channel. Again, we're consolidating right now, right around that 38% retracement. That's a typical level for a bearish correction. What I mean is that we have the primary downtrend and this is the correction. The question is, how far can it go? Normally corrections go 38, 50, or 61 in terms of fibs. So if we were to break out, maybe we could carry back towards 433. The big question right now that we don't have the answer to is that in fact going to happen? Now we're about another week out before the Fed's going to announce rate policy. The market's going to look heavily as to whether or not the Fed's dot plot is going to show them increasing through September, or is there a pause that's being reflected? That right now with inflation and where that is, we're given prices of goods, oil, for example, gasoline prices. It's going to be really, really hard for them to just sit back. So one of the biggest things, Don mentioned this on Friday, I believe, one of the biggest things to watch for right now is CPI, right? Inflation is going to be a big deal. And the Fed has dissected the two different kinds of inflation, right? There's one that's called this result of supply chain issues, and the other's a result of what? Asset price inflation. The Fed can do a lot on asset price inflation, as we can see. They cannot do a lot in terms of supply. You can't print food, for example. Well, maybe you can with 3D printers, but you still need the stuff to go into it. So my point in sharing this with the S&P is that right now we're just on holds. We're waiting to see which direction it can go. There's a chance that this week we could see a squeeze higher, push towards 430, 433. But again, we're running short on time before the Fed announces last week. And at that point, there is the possibility we could see it, the market continue to push higher, but it's going to be with some indication the Fed's going to be on hold as we get towards September. The only problem with that, any bullishness we're going to see should be rather temporary as the bigger economic issues are starting to rear its ugly head. So you can see there's lots of porridge on the table right now. You're going to have a very, very difficult time finding something that's just right. The bed that's just right. The chair that's just right. So Goldilocks is not here. And again, a great emblem of this is Amazon, for example, right? Amazon traded higher today, right? We're closed at 124.79. If you notice down here, it's a 20-for-1 split, meaning this is a 20th of what it was, for example, last week. Now, again, you expect this in normal, more feverishly bullish times to really create a lot of lift, right? Now, I understand there's this whole, archaic notion of a post-split depression. Yeah, it's possible after a split things may cool off, but we weren't necessarily running very hot leading into it. Saw a little bit of a 1 week rally and that's about it. And what you saw today was we kind of shot up and we faded back. What you did see is because obviously the lower price on Amazon did generate a lot of option trading interest. You notice over here, this was higher early in the day. We only finished about 8.5 times the average in terms of contracts. And again, I'm not sure that's adjusted or not, but you see 1.7 million on the call side. You saw some, a little bit of a bias here in the 10 June at the, I'm off here. Got to go all, at the 130 strike. Some of it kind of filled in a little bit lower at like 125. It's 130 out here early. Not a ton of big trades, but again, it skewed a little more bullish. But again, man, we just turned it over. We'll see how much of that transitions to the open interest after today's session. You look at 17 June as well. Scroll down to that same 130 strike. Where are we? Right here, 62,000 contracts. This 50,000 earlier when I did my session. So again, you saw a lot of trading around the 130 strike, which means what? That's today's high. I mean, maybe if we really take that out, assuming that interest carries over to tomorrow once it's updated. Remember, open interest is updated end of day. If we see that carry over to tomorrow, then if we break 130, it could create a little bit of a gamma squeeze and push higher. Again, are we really expecting to go all the way back? Probably not. Maybe we squeeze the 137 to 145. And as you look at today's session, what led the way? It was consumer cyclicals followed by materials, right? Followed by communications. The cyclical space is one area. There's a decent amount of short interest activity. Also, if you look at a product like SPHB, this is a high beta. You can try that again. If you look at SPHB, again, one of the biggest representations is technology and cyclicals. Notice where technology finished today, by the way, right? Cyclicals were higher, again, but 1%, given where we're basically closing, we finished below Friday's high and nowhere near the high from Thursday, for example. Point being is that, yeah, these is a high beta space, and there's a chance that some of the higher number shorts get squeezed here and we push higher. But when you look at the high short interest watch list that I have on the right-hand side here, we're just going kind of that 5 to 20% range. You'll notice kind of a trend that formed here. IQ, for example, right? Li Auto, EDU, those three stocks there. Got NEO on the list as well. These are what? What's the common denominator amongst these names? Let's bring up NEO here. Where is this located? Shanghai, right? Where's Li Auto located? Oh, Beijing. Where's IQ located? Beijing, right? What you're seeing is a lot of squeeze in these names that are Chinese stock names. Now, again, this was a theme of mine last week. We actually did talk about it last Monday. In fact, I'm looking at my list from last Monday, but FXI, for example, ASHR. I mean, these are companies that you saw a bit of a squeeze last Friday, on the 31st right here, for example, right? Saw a squeeze, we pulled back, now we're breaking out again. We were looking at this previously before that in my session on the prior Thursday. Point being is that Chinese companies are continuing to see a bit of a squeeze higher. If you look at FXI, ASHR, for example, and also KWeb, this is a web services internet ETF. So, for example, we're at the 61. All three stocks today also exhibited some unusual call option activity. So again, we've just continued the movement that we've seen since kind of that breakout day back on the 26th. We saw more activity come up last Monday. We're seeing the continuation here today. It's going to be a bit of a choppy ride. But for example, KWeb, could we go back to 40? We have resistance at the 61% retracement level, 32.5. If we take that out, we very readily could. And in fact, today in KWeb, try to find here. It was a roll from June to July. You'll see 24,000 contracts being closed out here at the $30 strike price. See Morgan being closed out here. Again, being rolled out. Basically, we're continuing this bullish outlook. You'll see out here 22,000 contracts, 14, 10,000 at the 36 strike, 10,000 out here at 40. So what you're seeing is some of the shorter dated stuff's being rolled out to higher strike prices as high as 40. Who says option traders don't look at technical analysis? That's our highs from January and February. As we look at FXI as an example, FXI, we're at the 161% projection, could readily go to about the 3450 area prior resistance or 3550 area prior support, now resistance. So again, this range between 34.5 to 35.5 is the potential target area. And for FXI today, it was the July expiration here at the 36 strike. Again, what does that align with? It aligns with about the 261% projection prior resistance here. It's a little bit higher, but pretty close, right? Point being is that, again, we're looking at continued upside opportunity. Now, here's the thing. When we're not talking about a Goldilocks type of market here, Things can change quickly. So how do you do it? One of the things to consider, and you'll notice the implied volatility is rising as you move out of the money. You could potentially buy a 33 and sell a 36. Might cost you about 45 cents, but you got $2 of upside. You could also keep it tighter. If you're going like a 10 June, for example, the skew is even a little bit steeper out here. Again, you could buy a 33 and a half and sell a 34 and a half if you want. It's costing you what? About maybe 15 cents. Very low risk, high reward. These are lottery ticket type trades. You're not going to win a lot, but if you get there, you might have 5, 6, 7 times your risk in that sort of trade going short amounts of time. You see that trade maximize. If you don't get the move, you could potentially maybe roll one time to the next week and see if it occurs then, and then walk away from it. Because again, not everything is 100% as a possibility. ASHR is another one. So again, we're pushing through the prior high here. We've got a fib projection at 32.40, maybe even as high as 34 in here. So look at ASHR. The activity was a synthetic. This ended up being in September. Now, this added to some activity we saw last week in that build up to the 33 strike, 40,000 contracts, 20. So they're selling, 20,000 here to help purchase 40,000 out here just to reduce the cost. Again, it's kind of a synthetic trade, but a ratio, more of a long call and half the interest here. But again, we're looking for pushing above $33, which happens to be right around here, right? So again, we're looking at a near-term target of $33 to $32.50 up in this space with a week to go. And again, what you're seeing is there's some skew on these shorter dated expirations positively. Rising and call implied volatility helps make these a little bit cheaper. Now, again, we talked about shorts. Well, guess what? There's a lot of shorts that are seeing more activity today, and they also happen to be center on kind of alternative energy, autos, that kind of thing. So, for example, Fisker, FSR. This was down today. Didn't really see any momentum. You'd want to see a bit of a reversal here in price. But this was a 10 Jan 1050, right? So, kind of expecting a little bit of positive movement. You may want to see that if we could push through 1050. Maybe we create a little bit of momentum or gamma. Maybe we push towards 12 as a near-term target. Fuel cell. Again, these are all high short interest names with unusual option activity. Fuel cell actually has earnings coming up on the 9th here. Fuel cell was a 450 strike for this week's expiration. So again, we start to take out 450. We could see this run to about 570. And maybe this is also an indication of bullish expectations, heading to the earnings this week. I'll share one more plug. Let's do it. So plug as well. So plug. Consolidating, right? We have the initial seed wave, flag, breakout. Looks like another flag here. If we break out, it could readily carry us to 20. And really, I'm more looking towards the 50% retracement, about 22.5, maybe even pushing a little bit extra towards 25. On plug, it was the 10 June 1850 strike. So again, pretty much at the money. But again, if we break out of this phase, we could reasonably run to about that 22.50 or 50% retracement, close to the 223% projection off of the initial seed wave from May 12th through May 19th. All right. Let's look at another one here. So last week, during my sessions, my daily session on TheoTrade, we noticed a bit of a trend with companies that are in logistics. So for example, XPO. And again, this happened right here on this day. And sorry, I was on that day right there on Thursday. Look back in my notes, I guess. But it was Thursday. So we saw some bullish activity in XPO and I believe EXPD, Expeditors International. And so these companies have done pretty well. On Friday, I went through, I kind of go through the best performing industries and sectors and industries for the week. And one of those happened to be logistics type companies, shipping type companies. And one of the stocks we focused on was ZTO on Friday. Why? It's in a space that's done relatively well. I got a lot of old lines on here. Let's clear them out. But what happened was we saw a nice little breakout. Looked like a bull flag forming. And again, we're kind of testing the low of the gap there, coming close to it on Friday. But we saw a lot of strength with peers during the week. And again, this did participate on the 31st on Monday. Anyway, today, stock is breaking out on good volume. It also happens to be, if we look at the Analyze tab here, a what? That's not loading. There we go. Think back. Sorry. Fundamentals. It also happens to be a Hong Kong or Shanghai stock, right? So it's a Chinese company. So again, kind of fitting both the logistics and Chinese with reopening, et cetera. We're at resistance here today. But again, if we do break out, we have a chance of maybe running back towards about $32 here in the coming weeks. And today on Zotis, it was a 17 June expiration. So let's quickly look at it. 17 June. And you'll see out here at the 28 strike. We saw here at the 26 and the 30. All of this activity happened at the exact same time. Look like we're kind of rolling into this 28 strike here, which isn't so far out of the money. But if we can see the stock start to trade through 28, or more importantly, you might look for it to break through today's high. This may create a little bit of momentum. Look for the stock in the near term to push towards 31. If we come back and kind of test the low of the gap day today, which is around 27.50, and we can catch a bounce at this point, it may create a little bit of a secondary move towards that 30 to 31 potential target. Heck, maybe even 32 here. It's hard to know where it'll go, but those are kind of your key resistance levels in the near term. I'm going to throw a couple out here as well. Also today, VST. This is a utility company. And again, utilities, if we look at the sectors, let's go back here to, where are we? Sector Spider ETFs. You notice utilities was actually the fourth best performing industry. Now, we did fade from the high. If you look at TNX, look at Treasury yields today, surging higher. That certainly put a damper on things in the market. Again, this is the fly in the porridge, right? Or one of them. But anyway, yields moving higher is not going to be good for stocks. But the point is, inflation fears obviously stoking the move here that the Fed may have to raise beyond what the Goldilocks would like. But if we look at TNX, again, putting pressure, well, guess what? Utilities was up and it faded back. Now, VST is one that tends to be a little more, not much of a dividend, but you'll notice what's kind of forming here, right? A shoulder, a head, kind of a shoulder, kind of a complex head and shoulder, inverted head and shoulders. If we can take this out, we got maybe a 23 to about a $26.5, $3.5 range. That gets you up to about $30. So watch VST. Today, there was bullish activity in it, anticipating it was a roll to the 20. Let me look at it. So we'll go to the July expiration. You'll see this roll here, rolling from 25 out to 27. Again, just kind of looking at that near-term upside potential here. It's not very far to the money, but it's just saying we're going to leave some money on the table in case this thing continues to move. And again, one way to approach a stock like this, again, spreads aren't, call verticals aren't necessarily greatly priced right now because we're seeing declining volatility out here, but we start to pick up from 29 out to 30. So you look out here at $30, it's way up here. You could look at some out of the money call spreads. Again, it wouldn't load up the boat on these kinds of trades, but it does provide a little bit of, it's pretty flat here. You can like a 27, 29. Cost you about 55 cents, $1.45 upside if we get to 29. So again, there's opportunity to play these upside spreads. Given where we're at right in the market, you could take a little risk with some upside call spreads versus getting out there and really plunking down a lot of cash, needing the market to go higher, risk to the downside. Just take small swings to the upside right now. Another one is Kellogg's today. So we look at K for Kellogg's. Setting up near a support level. I mean, this thing could be a head and shoulders pattern, and we're going to break that and head lower. We could see another run back to about 71. Notice how we're not looking for a major uptrend in Kellogg's. We're not suggesting this is like a huge value opportunity for Kellogg's, but we are looking at a June 72.50 on Kellogg's that was traded today. So again, come in here right here at the 72.50 strike. So just saying, hey, there's a lot of buying up here. We could see the stock gravitate towards that 72.50 price. Volume wasn't necessarily tremendous today. It's setting up early. You could look for this thing to trade through today's high. You could also look again, upside call spreads out here towards these higher strike prices, probably for July. The pricing's not great. Okay. In fact, we're seeing it kind of decline out here. It's going to be a little bit of more of an expensive vertical, but it is something to look at. Finally, we'll look at Unum here. UNM. This is a financial company. They own their UK company. They own a lot of like life, like Colonial Life, for example, insurance company. But notice today we did break out, and the volume was pretty big for the most part. We did finish, towards the upper end of today's trading range, above prior resistance. And on Unum, it was a bit of a roll for the July expiration, rolling out to this kind of 37.50 strike price. So again, the volume is greater than open interest. So what are we looking at on Unum? 37.50 is not much higher than this currently trading, but again, we're getting a little bit of momentum. We look at the range from this prior range here. Let's go from about 33.79 to about 36. It's about $3 on the breakout. This could carry us to about 39.50, which is right here. So maybe a near term kind of a swing trade on Unum Group. Today's action looked relatively positive, coupled with unusual option activity. All right, folks, that's all we got for today. Catch you back next week on the video. Have a great one. Thank you.